Hopefully, it still is a correction, but since we've already hit the bear market territory at 7,200, and if it stays here for a long period of time, then we may be in a bear market. And the stock market is notorious for going to a bear market even if there are really no problems. It has happened in the past. I guess the question is, if there really are no problems, then it will rebound faster. But if there are real problems, then it will last for a longer period of time. Well, of course, it's scary. The market continues to go down. I think everybody's really blaming it on the coronavirus outbreak. In Asia, we've had it since, I think, end of January. But I think things got worse when it spread to Europe, to US. But I think it's more of the US market, because the US market has been, in some ways, the most resilient equities market in the world. And all of a sudden, last week, it fell by more than 10%. Then, I guess that kind of sent fears, because historically, we all know that when the US sneezes, everybody catches a cold. So I think the COVID-19 was the last straw, that led to the sell-off of the US market. To some extent, I think there really is some level of overreaction. If you ask them, do you think COVID-19 is going to last until next year? I think almost everybody will tell you, no, probably it's just this year. Like SARS lasted up to July, maybe COVID-19 will also last up to July. So almost everybody agrees it's a 2020 issue. It's not going to be a 2021. Excluding the coronavirus outbreak, the outlook for this year is really very positive. Maybe it will only be delayed to the second half. Assuming that the coronavirus outbreak really ends by July, then I think the second half will look very good. The main impact really should be on property companies that are focused on hotels, tourism, maybe the malls. But that said, the problem is, even our property companies, I checked the exposure to tourism, it's less than 10%. So they really are not very sensitive to coronavirus. So on the consumption, maybe a little bit on retailing. But again, it's a temporary issue. So I don't think on a permanent basis they should be. But I think the market in general has been sold off across the board, without any regard for whether they would be sensitive or not. Like even, say, power companies, which theoretically should not be affected, or telcos, and even banks, they've been sold off. So I think it's an across-the-board sell-off. I do agree that it's now the best time to buy. I mean, it was already a very good time to buy early this year. It was a good time to buy last year because valuations were cheap. But then again, it doesn't mean a stock is cheap that it will not become cheaper. That said, it's not that don't buy stocks. I think you should buy stocks, but remember that the trend is currently not your friend. So I think you have to be honest with yourself. Ask yourself, are you buying stocks today with a long-term perspective, or are you hoping to make a quick buck? Because this type of market is not the market where you can make a quick buck. Yes, you will make a lot of money, but you have to wait for a very long time. You have to stay put, stay disciplined, be patient. So with that, I guess my advice is, if you're going to buy stocks today, first, have a long-term perspective. Second is to manage your risk, manage your size. Don't buy too much, and don't use money you know you will be needing in the next few months, next year. Don't rush in. Buy on a staggered basis, maybe over the next few months, assuming that the coronavirus outbreak will be cleared by July. Maybe you can stagger your buying up to July or even August, when the second quarter earnings come about. Then maybe leave a little bit cash to deploy when things are clearer when there are signs of an actual turnaround.